But let's keep it with numbers then. And it's been a strong sequential growth in Q3 when it comes to AU Small Finance Bank. Let's talk about the asset quality trajectory as well as the digital banking and initiatives with Sanjay Agarwal, the Managing Director and CEO of the company. Thank you so much for taking time out. Let's begin by talking about your deposit growth, which has been quite impressive this quarter. You continue to remain focused on digital and CASA. So how sustainable do you see your deposit growth and what kind of opportunities do you expect?
Yeah, thank you, Aisha. The whole purpose of bank is to build a deposit and that to retail, right? And AU in last 4.5 years, the day we became bank, the focus was on to build deposit. But in initial years, it's not easy to build trust, product, or the people awareness about bank. But slowly in last couple of years, and especially in this COVID time, because of our much initiative, much focus, and the team billions, we are able to have much focus on deposit, and that too quality deposit. Our the overall deposit has grown by 40% CAGR in last now 4.5 years. Our CD ratio is around 92%. Our retail deposit is around 50%, and which is also a very hardcore definition internally. And we have also got all the initiative, whether it's about the brand, it's about the product, it's about how we want to place ourselves in the market. We brought in our brand ambassadors, who actually narrated our whole story, how the AU actually works on the ground. So people also accepted it a lot in that sense. So I believe, we have to be sustained because I don't think that any bank can survive without deposit franchise and that to retail. And the team is on, and I'm very confident that the way we have built ourselves in the last 4.5 years in the tough times, what not has happened in the last 4.5 years, right? But that in that time also, we have done brilliant job in terms of building the whole ecosystem around us. So very, very positive on that side that AU will become one of the most sought after retail franchise deposits.
Okay, you sound very optimistic about your growth trajectory ahead when it comes to deposits. But you're also deepening your presence in the MSME space. Tell us a little bit about this strategy in terms of what kind of competition you're seeing here, and is there going to be a larger focus here on small ticket loans?
No, so I think that's the way the whole SFB has been designed, right? We need to do 50% loan lesser than 25 lakh. Our priority sector requirement is 75%. And that AU actually lend in the secured assets. We are not in the microfinance at all, right? And we've been into vehicle finance, which is a part of MSME from last 25 years. Our SBL book, just secured business loan book to merchants, is a 10 years, right? So housing we are doing from last 7-8 years. Commercial banking we are doing from the last 5 years. So I think entire piece has been stitched internally that, we need to go places. We need to go more into semi-urban and rural areas, which we call it core markets. And being in franchise of, the asset, we've been doing asset business for the last 25 years. So it comes very naturally to us. So, and honestly, we can grow at any pace in that category. But, the idea is to really balance between deposit growth and the asset. We don't want to outplace asset over deposits. We want to place a deposit first and then asset. So MSME in last two years, it was a tough time, but I think that thanks to the whole regulator and the government initiative have come out very clearly with a shining rays. And I believe bank need to help them out, and we will grow our wheel book, SBL book, and commercial banking to next levels, So it depends, how we really want to grow rather than the opportunity, to be very honest.
Also joining it. Sanjay, all of us have gone through COVID pain, and I'm sure some of your borrowers also have gone through that pain. Do you think that entire one-time issue which came, let's say, along with the second wave, which forced you to start lending less, which forced you to start readjusting your risk, is that behind us?
Nikunj, things are vulnerable, right? Things are uncertain. We have seen it from last 2 years. The COVID one, was more about how we were not knowing anything about it. So government reacted in a certain way. But I don't think that it lasted long. Maybe quarter one of COVID one, and then of course the COVID two was more deadly. And but we behaved very differently. And now COVID three, which is Omicron, we are just behaving. I think I don't know how to explain this COVID three, but I think things are behind us. People are more energetic. People really want to come out. And we at the bank, would have last year also we grown ourselves by 20%, and this year also our growth is around 20% plus. So in my opinion, things certain sectors, are still suffering, but the way we have handled, the way the customer have handled themselves, the overall the scenario remains very upbeat. And quarter three would again quarter four, can again surprise many people. And we as a bank are very confident because we have grown our deposit, we have grown our asset, the quality of asset, we have built enough provisions in book, which is not being used till now, right? So our digital initiative. So I think it's a combination of many things, Nikunj, as a banker, which makes me very happy. And of course, this is a once in lifetime kind of challenge. So the way we have built ourselves in the last 2 years is just high praise to my team, honestly, that, and of course, the whole ecosystem, which has done brilliant job in the last 2 years. So I'm very upbeat that this decade will belong to India. And if this decade belongs to India, AU will shine.
If your business is getting disrupted or could get disrupted because of fintech, because what fintech is doing is that every fintech individually is attacking all verticals of business. Some are attacking distribution, some are attacking lending, some are attacking MSME lending.
Nikunj, to be very precise, banking is a regulated business, right? And it has honestly an umbrella of an RBI. So, and it's a deposit franchise, which helps us to build a loan franchise, So if you don't have money, if you don't have good cost of money, you can't survive on a scale, That is why we transferred ourselves from NBFC to bank. And I'm seeing clear-cut advantage because at NBFC, the rate was high, people are able to join you, and the customer trust was also not there. So I think we need to see them in next 10 years, very interesting time. As far as I'm concerned, I take their agility, I take their ideas, but need to be very patient internally because many things are just to show you, right? Which is not even required. And we as a bank also can do everything, to be very honest, but we being a multi-product, multi-dimension bank, and they remain product specialization. So that's the challenge always remain, but I'm not too worried, honestly, because I haven't seen a very big lending fintech in last 10 years. There are many stories around us, but they just do unsecured, and which is just a small pie in the whole lending piece. But as a bank, we do much, right from commercial banking, home loans, vehicle loans that required to meet customer, understand him, then lend him. So not too much worry, but yes, we will take their ideas, take their agility, they will teach us, and we will build.
Okay, Sanjay, we don't get a chance to talk to you, so I'm going to take the liberty of, let's say, addressing or maybe clearing the air as to what I see when I speak to people about AU financials. And every time I speak to investors, HNI investors, and even analysts, they say AU is a great franchise. Sanjay really understands risk, but he's very aggressive and there could be a challenge in his unsecured loan because he's growing that book very aggressively. Is that true?
No, I'm so sorry, Nikunj. Perception is in the air, right? So I'm sorry, there's much perception personally around me, I don't know how to address that. But we are just, below 1% in our unsecured loan. And that too, Nikunj, when customer on a deposit side come to us, he looks for some kind of unsecured loans because that's the way the industry moves, right? We haven't done a single unsecured loan till 2019-20. We just started in COVID times because people were looking for that. Our idea is not to build on a very higher side the unsecured lines because we have the enough opportunity around Wheels, SBL, HL, commercial banking. But the need of the hour is to have a full bouquet for our customers, right? And that to database. And then once you speak about fintech, right, what they do. So I think we have much data available around our customers. We understand them better, and based on that, if some line is being created, to help them out in case of any eventualities, it's fine, right? But I don't think that AU will build. Honestly, I'm saying on a channel that more than 2-3% of their asset book in next 2-3 years. So what that data is, right? So, and we are not hungry for growth, to be very honest, right? Because we know that this bank franchise is for the long term, and we need to have a lot of patience internally and externally, and that's the way we do it. The aggression is not about the growth, to be very honest, Nikunj. This is about how we really want to build organization. And there we don't compromise. AU is a very special place, and I really want to keep it like that.
And I'm glad we're having this chat. I mean, since we don't get a chance to interact much, I'm just saying that let's just look at what feedback is, and I'm glad we're addressing that. So just to wrap it up,
I want to address more and more, sometime because that's
I hope to see much more of you. That means you'll have to agree. That means you have to come on the channel much more and pick up our calls when we call you for an interview request.
People say I'm aggressive, right? So
okay, last question.
Way, how you balance yourself. But happy to talk to you anytime, Nikunj. I have huge respect for you.
So last question. Yeah. Looking at all your businesses, a new growth cycle has started. Your deposits are also coming in a very strong manner. But without raising capital, how much can you grow with your existing capital buffer? Because what you are telling us is that a new cycle in a sense has dawned on the lending side, whether it is MSME, retail, or even for that matter vehicle finance.
But Nikunj, why we want to raise capital, right? We have raised capital in last 10 years, and we will raise in future also, right? So if business requires more capital, we'll raise it, right? And you know about it that our 5-year is getting end on April, this 22 now, and my ceiling of not selling equity up to 26% will be going down. So we have enough room to raise capital, but just for a data point, by March also our tier 1 will be north of 20%, right? So I don't think that capital honestly is a real challenge for us, because the way we have grown ourselves in our deposit franchise, asset quality, digital. So I hope we can raise capital as and when it's required.
To hear that, Sanjay, so nice to hear that. There are so many yes and no's which we managed to address in today's interaction. Look forward to much more of you going forward, at least on the this year.
No, same here. Same here. Thank you, sir.